Hi, it's Nero here from Investment Rise, and you could be forgiven right now for thinking that we're about to have Armageddon again when it comes to property prices, because it's now almost like not a day goes by that we don't see another headline predicting doom and gloom in the marketplace. And yes, things have changed. Yes, the national median house price has declined for the first time in years. Yes, we've had a large interest rate rise. But does that mean that we need to panic? Does that mean that now property prices are going to slump? I mean, I know it makes great fodder for the media headlines, and if you're looking for more of that doom and gloom, non-data based reporting, then you may as well turn me off right now. Okay, because if you've been following me for any length of time, you know I'm a follower of data, and what I'm going to do here in this episode is I'm going to share with you what's happening around the country, what markets you should avoid, what you should do as an investor, okay? And why there may be some really good opportunities for you to play a bit of catch up or get ahead on your financial goals, especially if you've been sort of putting off investing for a little while yet, okay? So we've got a lot to cover here. Yes, a lot of data points. Yes, there are things in the media that are true, but then they've been sort of exaggerated, and I want to allow you to go away from this episode with a bit of perspective, okay? But first of all, let's have a look at what's going on around the country. So here we have data from CoreLogic and looking at the monthly values and the growth rates around the various capital cities as at the end of May, 31st of May, 2022, okay? And what you can see is that Sydney had a price drop of 1.1%, okay? That was Sydney. Melbourne median house price dropped by 0.8%, okay? But then Brisbane rose by 0.7%. Adelaide rose by 1.9%, okay? Extremely solid. Perth rose by 1.6%, okay? And in fact, if you look through the data, the only other place that really fell in value was Canberra at 0.4%. Even Hobart, which fell last month, rose in May at 0.1%. Okay, so what I mean is Hobart dropped in April, but has then rebounded oh so slightly at 0.1%. And this is what I think you're going to see in many of our markets going forwards. You are going to see some markets drop. There is no doubt in my mind that markets like Sydney, Melbourne, Canberra, yes, those markets are going to decline. I'm not expecting a huge property crash, mind you, but I do expect that we are going to see a correction. We are going to see prices drop from their record highs as interest rates continue to increase, okay? But that's just those three markets. Then you're going to see markets like Hobart, which one month they're going to show a decline, other months they're going to see a slight increase, and so essentially you have a flat market when you average it out. But then you are going to see other markets like what you can see here in Brisbane and Adelaide that are continuing to rise. So what should you do as an investor? Well, that comes down to you and your goals, okay? Because if you're someone who is very attached to buying in Sydney, buying in Melbourne, buying in Canberra for whatever reason, then you should not enter the market right now. You want to wait, because I do believe you're going to have some great buying opportunities towards the end of 2022. But if you're a property investor who wants to invest based on data, then if you think about it, about 40% of Australia's population live in Sydney and Melbourne. That means 60% of Australians live outside of Sydney and Melbourne. So why not target where 60% of people live, not 40% of people live? Now, of course, so you might say, yeah, Nero, that's great. You say only Sydney and Melbourne and maybe Canberra to avoid, but the national median house price has fallen as well. And you're right, it has. But let's have a look at why it's fallen and what it actually means, again, for you if you're looking to invest in property. So this is an article by CoreLogic which says, Sydney, Melbourne, Canberra prices push national average into decline. Now check out the next line here. It says, despite most capital city markets experiencing an increase in dwelling value, national housing prices have recorded their first fall in nearly 2 years. Now, what does that tell you? That means that more places are rising in value than falling in value. And that's just capital cities. We'll come to regional areas in just a moment, okay? So therefore, don't think that it's just Sydney and Melbourne are then reflective of the whole country, okay? Different markets are performing very, very differently. It's just that because there are such a high concentration of population, high concentration of property transactions in Sydney and Melbourne, what's happening in those two markets is bringing the national median house price down. But like, for example, what you saw in Adelaide, okay, and this is not advice, I'm not saying you should go and buy in Adelaide, although I do think it's a market worth considering. Yes, if you look at Adelaide right now, they couldn't care less what's happening in Sydney and Melbourne, right? Their prices are hitting record highs every single month, okay? Brisbane, very, very similar as well, okay? In fact, at the start of this year, Brisbane median house price was $780,000. Recent reports put it now at around about $950,000, okay? So that's a significant increase in just the last 6 months. And so I don't expect that increase is going to continue, that rate of increase is going to continue, no. But do I expect areas like Brisbane to keep rising in value? Absolutely. And here's the other thing, even when you look at Brisbane as a whole, if you look at the rate of price growth of the median house price, it has declined. But that's because you're seeing sort of the $1.5 million, $2 million, $2.5 million price ranges. And yes, for those of you who don't live in Brisbane, there are suburbs who do have houses at that kind of price range. Those growth rates in those suburbs are starting to slow. But some of the fastest growing areas in Brisbane right now all have median price points under $800,000, under $700,000 even, okay? Very, very affordable. And the best part is in a lot of those markets, the rents are going to cover the mortgage, even as interest rates rise. Okay, so you need to really start dissecting the data a lot more. But let's go back and have a look at this article. CoreLogic's latest Home Value Index HVI report has revealed that national dwelling prices have fallen for the first time since September 2020, in spite of the fact that 5 of Australia's 8 capital cities reported an increase last month. The dampening of housing conditions in May, which has resulted in national values decreasing overall by minus 0.1%, has been attributed to a mixture of rising interest rates and inventory level, as well as lowered consumer sentiment in the 3 major markets. Sydney, which reported a decrease in dwelling values of 1% in May, has been experiencing progressive value decline since February, while Melbourne has reported a drop in prices in 4 of the past 6 months, culminating in a 0.7% fall last month. Similarly, Canberra has registered its first monthly decline, 0.1%, since July 2019. This has pushed national capital cities' values down by 0.3%, despite overall growth in the rest of the capital cities. Then the article goes on to talk about how well Adelaide's doing, Brisbane's doing, as you saw earlier on. So therefore, as an investor, what is this starting to tell you? It's starting to tell you that maybe the headlines that you're seeing in the newspapers, people predicting 11% price falls, 20% price falls, 25% price falls, okay? They are focused very heavily on Sydney and Melbourne. And if you live in Sydney and Melbourne, then they're the headlines you're seeing. And that's probably going to be coloring your view of the property market. Okay, and that's why here I'm trying to give you a national perspective, okay, because there is no doubt that there are some great opportunities outside of our 2 biggest centres. Now consider this. Let's say you have a budget of $600,000, okay, that you want to, and that's what you want to stick to, and that's what you want to buy an investment property for. And you're wondering now, do I buy or do I wait? All right, $600,000 is your budget. Now, Sydney median house price is currently sitting at about 1.6 million, thereabouts. The worst prediction that I have seen, and I don't agree with it, but let's just go with this for now. The worst prediction I've seen for a price drop is that the Sydney median house price will drop 25%. Okay? Now, if that is to happen, that would take the median house price from 1.6 million down to 1.2 million. How is that going to help you if you have a budget of $600,000 or $800,000? Okay, similar figures will work out for Melbourne and for Canberra as well. Okay, so the exciting part, the best part is that if you're someone who has a budget of $600,000 or lower, there are some opportunities right now for you to catch up. Okay, there are some areas right now that are growing in value significantly, and I expect double-digit growth in the next 12 months. Now below you can see the data for an area that we're looking at for some of our clients right now. Median house price, it says $474,000. That's according to CoreLogic. Okay, say under $500,000 for argument's sake. But look at the median house price growth, 24.4% in the last 12 months. And based on the indicators that we're looking at, that rate of growth is actually increasing. Not decreasing, it's increasing. So while some capital cities, the rate of growth is decreasing, this is an area where the rate of growth is increasing. Yes, it's a regional area, but it's one of so many areas we're finding for our clients right now, okay? And again, this is an area where the rental returns are so strong that the rents will cover the mortgage, so you're not out of pocket each and every month, okay? So what's my takeaway message here? It's that you want to really start looking at data. You don't want to base your investing decisions off what you're seeing in the headlines, but rather understand that these headlines are based very heavily on Sydney and Melbourne, and I agree that Sydney and Melbourne and Canberra, to a large extent, are markets that I would be avoiding going forwards. Markets like Hobart, they're probably going to stay flat, so if you buy there, you're not going to lose money necessarily, but you're probably not going to make a lot. But there are so many other areas around the country, okay? I recently read somewhere that there are 880 property markets in Australia, okay? Let's say there are 800 property markets around Australia, okay? Now, and let's say at the moment I've identified 4 that you should avoid. Let's say there are 40 that you should avoid, okay? So that means that now if you take a dartboard, all right, and you just literally blindfold and throw a dart, okay? You want to avoid 40, which means 40 out of 800 is 5%. That means you have a 95% success rate, right? A 95% chance of finding a market that isn't falling in value, right? Why wouldn't you then choose to invest? Now, I'm not saying you apply the dartboard methodology or anything of that nature. What I am trying to highlight to you is that if you just apply a little bit of data, you start looking outside of our major centers, you have such a strong chance of finding a market that is growing in value right now with great rental returns, so you're not out of pocket each and every month. It's going to get rented very, very quickly. Some of these smaller markets are in such a rental crisis that people are paying 3 months, 6 months rent in advance. Okay, we've had many of our clients experience this. So it's a great opportunity for you to get involved. Yes, it's going to be more difficult, don't get me wrong, to invest right now than perhaps was last year when you could have just probably bought anything and made money. Okay, but that's where right now it's not the time to be speculative. It's not the time necessarily to sit out if you're trying to invest based on data and grow a portfolio. Rather, it's the time to do your research, apply due diligence, get some professional help if you feel you need it, and then find those opportunities where you're going to get those strong rental returns, strong scope for capital growth, and buying properties at very affordable prices for you, which makes it very low risk and very safe. So I really think there's some great opportunities, and I hope that this episode has kind of highlighted just how different the country is and that you can find some amazing opportunities out there for you to get ahead financially. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio that pays you an income each and every month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.